Welcome to another Coffee with Samso, where we speak with ASX companies and follow what the stories are. Today I've got OD6 metals here with us. We're here at the University Club in Crawley on the University of Western Australia campus. So OD6 is all about rare earths in Esperance. It's just northeast of the town of Esperance. Market cap is 23 million. Share price is around 25 cents. I've got Brett Hazelden here, who is the managing director of the company. They've just released their Maiden Resource. So, Brett, welcome back.
Thanks for having us back. Nice, cool day for us.
You're the tell everybody you're the rare earth influencer. So tell us about it, the resource, and we'll go from there.
Yep, so resource, so we've only listed 12 months ago, so to have a resource out within the first 12 months of listing, we only had drill rigs turning in August last year, so we've actually had a really good run to get where we are. We've now got the biggest clay-hosted rare earth resource in Australia at 344 million tonnes at 1,308 parts per million total rare earth oxide, or TREO, and that's using 1,000 part per million cutoff grade, so 3 times bigger than the nearest peer in the industry in this clay rare earth industry. So yeah, no, we're really happy with the result, and plenty more to come.
Just so that, I mean, it's a bit technical, but why did you choose that grade as a cutoff for the resource?
Yeah, when we've looked at the economics of where these need to sit, we don't think anything below 1,000 parts per million is really going to stack up going forward. So we've gone for a higher resource. We could have put a 1 billion tonne resource out there at 300 part per million cutoff grade. That's in the announcement, that's there as well. People can look at that. But 1 billion tonnes is a big number, and it's probably somewhat irrelevant. So what we need to do is look at where the economics going to drive it. So that's processing costs, mining costs, your G&A, general administration costs, and then just trying to figure out, well, what's going to be economic going forward and not waste everyone's time.
Because the reason why I asked is 1,000 is a big number, and you kind of mentioned that as well. I've seen a lot of resources with numbers, 3 numbers instead of 4 numbers. And we all know that this is a costly exercise going forward, right? So do you think, I mean, I know you mentioned it, that you don't think that it's going to be of value at the lower numbers, but do you think 1,000 is there, or do you think could it be 2,000 going forward? Because everything's new, right?
Yep.
Everything's new. The understanding is like so fluid. It changes, as every time we speak.
Yep. So when you look at it, generally what happens is you put out a resource and then it goes into reserve. So you'll start with an inferred resource, which will be the bulk of your tonnes. You'll then do some infill drilling. That'll go into indicated and measured. Your number will be smaller, so say 400 million tonnes will become 200 million tonnes in indicated and measured, but your grade should go up. And then when you go into the reserve, you're then looking at the best, most economic parts, and your grade should go up again. So from our point of view, we've looked at it and said, we probably think 1,000 is the cutoff for now for the resource. But by the time we see and we pick the best parts from the ore bodies going forward, the grade will probably be 1,500, 1,600, maybe even higher in terms of what actually feeds the plant in the first 5 years. And it comes down again to the economics. You want an EBITDA margin of between 30 to 50%, but you want it highest in the first 4 or 5 years so you can pay back your capital. If you can't pay back your capital, then you can't get loaned any money. And then once you've got the capital paid back, then obviously your grade can drop. So there's multi-generational asset out there, we think, based on what we've seen to date. So let's pick the best part, get the highest grade, make it as economic as possible and move on. And we just think it needs to be above 1,000 parts per million, if not higher.
I guess the $1 million sort of question is, how should shareholders or potential guys who are looking at you see you now that you got this resource? I mean, what does it mean for them? What do you think it should mean for them?
Look, it's a bit of a validation that there's a big resource out there, or a big system out there. So if you look at our earlier presentations where we put up our aerial electromagnetic surveys, we've been able to narrow down our exploration focus into these areas. And the resource that we've announced is less than 5% of that total area. So when you look at the system that we've got, there's obviously going to be billions of tonnes out there. So from a grade and size, we should be getting recognised on that. At the moment, the share price hasn't reacted to that. If you look at a enterprise value per tonne, we should be somewhere up around $100 million if you're comparing to some of our other peers on the ASX, so AR3, Mika, IXR, etc. If you do a pure EV per resource tonne, we should be a lot higher than we are. So I don't think people have quite recognised that fact yet, or recognised how big this is. But also the opportunity of being big is you can then focus on the best bits. Whereas if you're smaller and lower grade, you really start to struggle about how you're going to get 10, 20-year mine life or 30, 40-year mine life.
I guess, rare earth industry, not long ago I was asking you what does the grade mean, what's a good grade, and how much intercept is a good intercept and things like that. And I think that the understanding of this sector is still, as we said, very fluid, and jury is nowhere near coming back to the courthouse. And that leads to my next question, which is really the crux of where I think the understanding's at now. We've gone from those things I mentioned, what does the grade mean, what does TREO, etc., etc. Now it's all about the lab, about the met tests and things like that. And the market seems to be focusing on this rightly at this point in time, but there's this talk about ionic and clay, and a lot of people say, oh, look, ionic is best and clay is not so good, and etc. But I simplistically let's call them alluvial rare earths. And there seems to be a difference in, there's no difference in physical attributes, as I've learned. It's all about going into the lab and about whether this thing comes out or not. So do you think the whole idea of a better style of deposit is flawed, and the conversation should be about the ability to leach and extract things out, and obviously reduction in chemicals, the balancing act and everything? Do you think that should be more the discussion than, ionic's best and not?
Yeah, no, I agree. So alluvial is probably not a bad term, because what we've been is it's a granite that's been obviously eroded into clays, and most of the clays are very similar in their properties. So you'll see in terms of our MagREO, we've got 23%. You'll see that very similarly across most clays in the industry, and that's where the value drive comes from. So how are you going to get those four basic elements out? So NdPr, dysprosium and terbium out, and what's the economics behind that? In terms of ionic versus non-ionic and all those, we're all clays. What everyone's seeing, and I've seen it in multiple releases on the metallurgy now, is the rare earths are located in the fines fractions. So anything less than 75 micron, some people say 20 micron, but it's generally very, very fine. If you can put it into a leach tank, you can generally extract it with acid of some sort. Now, the ionic debate is interesting. I've only seen one true ionic resource that's probably come out, in my opinion anyway, in the last 12 to 18 months, and that's probably Meteoric in Brazil. They've had some good numbers in terms of their high grade. They've got a big resource. They're probably the best one I've seen, and we're probably the second best, is in our obviously opinion. But they've got a true ionic, and when I say true ionic is using a pH of 4 and ammonium sulfate. So ammonium sulfate's like a fertiliser. I can buy it on my farm. It costs $500 a tonne to buy on the farm landed. You stick it in there. You don't have to add too much acid. You take it down to pH of 4, and you can easily extract 50-60%. That's a true ionic ore body. What we're seeing in a lot of the clay-hosted ones, especially in Australia or overseas in Africa and a few others, is they're getting 10-15% recoveries on the ionic basis, so a pH of 4 and ammonium sulfate. So that's not going to work economically for anyone. That's blind Freddy can see that. So then everyone looks and goes, well, I need to get around 50-60% recoveries. And I think, go back to the original interviews we had once upon a time, I always said 50-70% recoveries is going to be a good recovery for the industry. And to achieve that, you've got to add acid. So you're taking your pHs down to around a pH of 1 plus or minus a little bit. Why do you do that? That's when the acid can actually get into those ultrafine fraction of the rare earths and start extracting that into solution. They're not extracting everything. There's still a non-ionic portion, or I should say a refractory portion. that's never going to be recoverable because you've got to stick it in an oven, burn it, and you'll never get those recoveries. So on a pure basis of ionic versus non-ionic or whatever else, I think it's a flawed argument. And as you mentioned, it's what's the total cost to actually extract it. So hence why we've also chosen a higher cutoff grade. If you've got 800 ppm, you can't afford as much in terms of acid or reagents or mining costs or whatever else. But if you've suddenly got 60% to 100% higher grades, so 1300 to 1500 or 1600 parts per million, suddenly you can afford an acid. You can afford to suddenly extract, instead of 10, 20, 30% recoveries, you're now getting 50, 60, 70% recoveries. So you're getting a double whammy there. You're then getting an increase in revenue. You're almost doubling your revenue by being able to use the acids. Yes, the acids cost more. We've gone down the path of looking, do you use sulfuric acid? Do you use hydrochloric acid? Do you use ammonium sulfate? Do you use salt water? All these things. So we're looking at those. We came to the conclusion that hydrochloric acid is better because you'll get a higher recovery. You will also put more impurities into the solution that you'll have to remove at the end of the day. But when you look at how do you produce hydrochloric acid, you use this thing called a chloroalkali process. So a chloroalkali process is pretty simple. It's it takes salt, so pretty pure salt from, say, Northwest, Lake Deborah, all those places have got good quality salt, so it's virtually table salt. You then add water and you add power, and you can then produce a hydrochloric acid, but you also produce a sodium hydroxide base, which is an alkaline product. And why is that important for? You're not trucking water down all around the place, so you don't have to truck hydrochloric acid 32% in with a lot of water from Kwinana. You can do it on site. But at the end of the day, you need to neutralise that acid to precipitate out, even with a true ionic process at a pH of 4, you still need to precipitate out your mixed rare earth carbonate by increasing the pH back to something closer to neutral. So you still need that alkaline material, which is sodium hydroxide or lime. So we've looked at what the total cost is, and you don't want to be having all these trucks coming in from all these other processing facilities all around Western Australia. If we can just have one spot on our site that trucks in salt, we can then have our two main reagents that we'll use. We then use it to leach, but when we also use it to neutralise at the end of the day, the cost is really, really effective.
Okay. And I guess the bigger volume you have, the more error you can have. Was that a okay way to think about it?
Yeah, look, from a resource point of view, the more tonnes you've got, if you've got 1 billion tonnes to choose from, and you only want to choose IXR, for example, they put out 5 million tonnes per annum. That's where they put their economics for a clay-hosted rare earth in Africa. So 5 million tonnes at 10, 20 years, you need 100 million tonnes. So if you've got 1 billion tonnes and you want 100 million tonnes, you've got to choose the best 10%. But if you're only starting at 100 million tonnes, you're already you've got to treat everything to try and make this work. So yes, size wins in the end, but you want to choose the best of the best, as we call it. And the best of the best isn't just metallurgy recovery, it isn't just grade, it's also acid consumption, it's stripping ratio. So we're looking at stripping ratios of less than 0.3 to 1 at the moment at some of our ore bodies, so it makes it really, really cheap. Whereas if you're 1 to 1 or 2 to 1, suddenly your mining cost has gone from $2 a tonne to $6 or $7 a tonne. So there's all these things that will then need to go into a geometallurgical model, into a mining model, to figure out where is the best sweet spot to start, how do you pay back your capital as quickly as possible, and how do you get the most revenue from that. And grade is one thing, recovery is another thing, but you've got to add 4 or 5 other elements into that mix.
I mean, in our previous discussion, you talked about how you guys kind of figure out where the refractory stuff are and where they're not refractory. And obviously the key conversation was you've only touched a fraction of your potential resource area. So how big could your resource get in terms of the number? I mean, what is it, 344 million tonnes?
So 344 million tonnes, as I said, if we chose a lower cutoff grade, we would have had 1 billion tonnes already. That's less than 5% of the area. So our AEM's identified 250 square kilometres of clays out there. We're busily drilling more portions of that as we speak, and we might as well talk about that now. We've got 10,000 metres of drilling that we've done to date. We've got another 10,000 metre program that we're drilling as we speak, and that's testing a lot of the new extents of these things up to 17 kilometres in length that we're expecting. So these resources most likely going to be billions of tonnes. But to some extent, you just need to find the best part. There's going to be stuff that won't leach properly. There's going to be high stripping ratios. There's going to be high acid consumers. If you've got limestone, for example, that's a acid consumer. So we don't have too much limestone around the place, but you want to avoid those type of areas. So there's all these little intricacies that start coming into how we design it, but we just got to find that sweet spot.
So you mentioned limestone in those. Are you talking about the host where the REO sits in those type of rocks?
Yeah, so some, not in where we are in Esperance, but other areas around the world, you'll see that it might sit on instead of a granite, it might sit on a limestone base. So when you start digging up ores, you don't want to be digging up limestone because the acid will just consume it. Equally, we've got areas within our spots that have high acid consumption as well. They've generally got calcrete, which is like, you know what calcrete is, but it's like a limestone that sits on the top. You want to avoid those areas as well because it just consume acid and your cost will go through the roof. In terms of acid consumption, we haven't put any recent numbers out about acid consumptions, but there were acid consumption numbers done originally that we put in the IPO. And the acid consumption numbers, you obviously want at the lower end of things. I've seen HRE put out numbers that say they're averaging anywhere between 4 and 20 or 40 kilograms per tonne. Ours were anywhere between 10 and 30 kilograms per tonne in the IPO documentation. We've been able to see lower numbers than that. And we're also looking at the screening method as well. If you can remove 40% of your ore, in terms of getting rid of the coarse fraction, suddenly you're treating a lot less. So your acid consumption numbers might be 4 kilograms per tonne or less. So we haven't put anything out recently deliberately because we don't understand that yet. We think the numbers are coming down and they're looking really, really good, but we just need to work through those numbers and put out a realistic number rather than rush to the gate.
Like a beneficiating process.
That's
backwards kind of thing.
Yeah, there's lots of things that go into it. We just need to not put out a number that is not achievable in the long run or doesn't reflect what the process will be.
I think that's the challenge for this sector, is that the understanding, even from your side, is it's still lots of unknowns. And from the outside, the investor side, it's even worse because we're not privy to the understanding and everything else. And trying to say A is better than B and better than C, and etc. It's almost like a minefield for us from this side of the fence to try and figure out who's who and who's the bee's knees of the industry.
Look, I've got a metallurgy and chemistry degree, so that's my background. And I'm very disciplined about working through the process and not just trying to push it out there. I don't read hot copper or any of those things because there's a lot of keyboard warriors out there pushing their own stocks or saying this is bad or that's good for whatever reasons they are. But there's a lot of misinformed or people that just don't have the rare earth experience that put some comments out there that aren't helpful to the overall industry. And the reality is they don't understand it. If I don't know about it in terms of what the process is, then how can they already know the process? Everyone can assume what the process is going to be. And we did put out a slide in our presentation pack that tried to put a simplified process about how do you do it. You dig it up, you truck it, you'll acid leach it. You could do that as a heap leach or a vat leach. We're going to put it into a tank. You then purify it, so you remove the solids from the liquid, and you then treat that liquid to remove aluminium, iron, uranium, thorium, any of those impurities that you don't want in there, and then you precipitate it out. So we've got a process that we've put out there that just simplifies what we need to do, trying to educate people. We've also tried to say these are the inputs that you need from a reagent point of view at certain steps, and then there's a cyclical nature about there's water, how do we recycle the water, how do we recycle the acids, how do you get the best economics out of it all. And at the end of the day, you need to put it into a neutralisation vat, if you want to put it that way, dewater it and put it back into the pit, rehabilitate it all. So we've got a good understanding of it. We're working with ANSTO. There's a lot of people making commentary out there that just really are uninformed. But look, our job is to get out there and educate people and say this is why we're doing it. and we're not just looking at the first step of leaching, which is what everyone keeps on talking about. We're trying to look at what all the steps are to actually get an economic process in place, all the reagents that are needed. And again, it comes back to, I suppose, your original question about ionic versus non-ionic and all those. The process is very similar for all of those. So we're going to put it into a leach tank. We're going to, for us, it might be 6 to 12 hours leach time frames. For a pure ionic at pH 4, it might be 2 hours, 3 hours. But you still got to have the same equipment to then remove impurities, etc. So capital cost is not going to be hugely different between these processes. You've still got to treat lots of tons. You've still got to put it through the same technical process. It's just going to come down to pure operating cost.
I mean, look, when my sort of understanding is when we first started with talking to the likes of yourself,
Yep.
and learning it as we go along, because I actually thought that there were some physical attributes that would differentiate between ionic and clay, but apparently there's none.
Yeah, they're all in clay. So
Yeah.
The clay, you can't tell if it's ionic or not until you've got it in the lab and you've actually done some work.
Yeah, even knowing the grade doesn't tell you, because it's what happens in the lab that tells you whether you're one or the other.
Yeah. Even the colours of the clays, we've seen multiple different colours. We've seen reds and blacks and whites and greens and you name it, and it doesn't actually give you a real guide. The only thing I can say is a black clay has a lower recovery than others. And if you're right into a recently weathered clay, which is right next to a granite, the recovery is lower. So we know those basics around there, so we avoid those zones. And as we learn, we'll find more relationships over time. We know there's relationships between calcium and phosphorus and potassium. And that's some of the mineralogy work that we've been working with ANSTO, Murdoch University, and also CSIRO to understand. We're still getting that understanding coming through. They've all been doing different mineralogy works. Once we get a clearer understanding of what type of markers there might be from a chemical marker, so this much phos or this much calcium should say this will be a better recovery, then we'll also use those as well.
Again, the next thing is the MagREO percentage. Is that something that you guys can figure out geologically now? Is there a geological concept that if we had this, we should have 50%, 40%? Is 23%? Because everyone seems to be around the same number.
Yeah, I think it's a geological consistency. So there's a whole heap of curves that come out of this thing that there's a chondrite curve once upon a time that has these relationships between all the different rare earths. But generally what we find is clay-hosted rare earths, and you see this out of China, they're the ones that have a higher proportion of heavy metals, or heavy minerals, I should say, not metals. So the heavy rare earths, whereas the carbonatites, the hard rocks, they have a lack of those heavy rare earths. So for us, we talk magnetic rare earths, so the 4 different ones, NdPr, but also dysprosium and terbidium. But the hard rock guys will only generally talk NdPr because they don't have those other ones. What we're seeing is it's pretty consistent, 23%. Occasionally you'll get some numbers spike up. We saw it at Grass Patch and a few others that might get up to 30%. But consistently across most of the ore bodies in Australia and probably a lot of overseas, IXR for example, they are sitting around 23%. And that's industry good, and it's much better than a lot of the hard rocks.
How much influence, I mean, I know you're not a geologist, but just asking the question, how much of the base, the hosting rock play, how much do they play in terms of chemistry, other than you're scraping it up and then sitting in it?
Yep.
Does it, like, whether you're granitic or ultramafic or limestone, etc., etc.?
Yeah, so I think there's most ones we're seeing are from granites. You do see someone from mafics as well. The mafics, I think, are still working through the metallurgy on all of that as well, so it gives a slight different result. But from a pure, how they form, most of them came from granites, the grand scheme of things, and that's where we're seeing.
Do you think your grade will change much? Like, we've got, 1,300 now.
Yep.
Do you think, or is the great variability not something that you can't sort of put a finger on?
We've only done less than 5% of our total area, so the answer is I believe there's probably some area that's better. All we've done is a couple of lines that were existing lines and tracks. We're now pushing in new lines and tracks into areas that have never been explored before. Is there the hope that we're going to have a 2,000 part per million trio? Yep, with any luck there will be.
It's not unrealistic.
It's not unrealistic. We've seen grades of up to 6,000 part per million in some of our drilling that we've done in certain areas. So if we can get big, thick intersections, which is what we continue to chase, of between 30 and 60 metres at those grades, it's obviously going to be a good spot to start. But grade is also sometimes a marker. So when you've got a really, really high grade, and I'm talking 10,000 or 6,000 or whatever the number is, you generally find that associated with more recently weathered rocks. So they're going to be most likely less recoverable, so more monazites and those type of things that can't be recovered through a leach process without taking it up to a high temperature. So that's the only caution that when people put numbers out, look at it and go, 10,000 is a big number, but the reality is most of the clay ones that are sitting around somewhere between 800 and 2,000.
I've seen some around 4,000s and stuff.
Yeah. But trying to get consistency over hundreds of millions of tonnes,
Yeah. Rare earth market, how's it going? Has it changed much? Are we going to expect to see much changes? Is it just going to be steady as she goes?
So the rare earth market's softened a little bit. So there's this big push to obviously westernise the rare earth whole production line. So China's, I think, has been playing silly buggers to some extent by trying to push out a little bit more volume to keep the likes of, say, Arafura and Hastings and all those guys that are trying to get a project up at the moment. They're billion-dollar projects, hard to finance when the price is a bit lower. So the price has softened. The forecasters are still saying demand's going to be 3 times what it is now and the prices are going to go up. But I think at the moment what we're seeing is just a little bit of manipulation within the markets coming from existing players trying to protect their market share. And obviously the Western world, especially with America's IRA fund, they're actually putting trillions of dollars into not just rare earths, but the whole market to try and westernise a lot of the markets away from certain entities.
Is there a easy answer to hard rock, soft rock costs of mining?
Never an easy answer. I don't think every ore body is different, as we know. I think there's got to be a mix of the two. So if you look at some of the good hard rock ones around, they're good high grades. Their cost structure's higher because you've got to drill it, blast it, crush it, grind it, put it into an oven at 600 degrees, go through the whole process. They're definitely going to be more expensive, which is why you need higher grades. So hard rock, definitely need high grade to make it work. Clays, lower grade bulk volumes.
High grade is in what number?
So I think 1-2% trios.
Wow.
And again, you need to look at NdPr contents or MagREO contents because if you've got lots of cerium and lanthanum, you're not getting much money for it. And you can see that in when we put out our comparison of our grade with where the value comes from, 90% of our value clearly comes from 4 elements, and that's it. The rest of the 11 odd elements are only giving you 10% value.
Yeah, that's where I was alluding with the earlier question, your MagREO percentage.
Yep.
You know, if you had 23% and suddenly you're at 43%, the value proposition is
much better.
Humongous, you know.
Yep, but we haven't seen any ore bodies that have that higher percentage, and that's where that chondrite curve comes out, where there's generally a consistent relationship in terms of cerium to lanthanum to NdPr and everything else. You just get some that are enriched a little bit higher.
So how's the equity market treating you, and how do you see, is it a straight correlation between what they think of the market, the general rare earth market, as well as OD6? Is there a disparity? Or
the market's been an interesting market. Obviously, we just come from end of financial years, so people have been selling off shares. The market was pretty ordinary and still is relatively ordinary. And the rare earth prices obviously come off. Probably shouldn't affect us because we're still another 4 or 5 years away from production at the quickest side of things. The general one for OD6, based on this mineral resource, based on what we've got out there, we should be a lot higher in terms of share price. Now, is that just a pure lack of understanding of what we've got and how we're going to do it? That's an education process. If you compare it to other peers, we should be $100 million market cap is where we should be sitting when you look at IXR, AR3, Mika, HRE, all those other ones, and you do a enterprise value per resource tonne out there. That's a metric that a lot of people are using, and we should be up at those levels. So I think there's a long way for our share price to appreciate, but that's also an understanding factor as well.
Look, I think having been to, as I mentioned earlier, that I've been to Singapore and Malaysia and talking to brokers and things like that, I think the risk on is happening. Risk off is still maybe floating, but I think there's more temptation to go risk on now because people are asking questions, people are wanting to delve into things, so...
The reporting season's coming up for most people as well now, so I think the reporting season won't be as bad as people are expecting. Everyone's expecting recessions and all these things, but I think most businesses have already sort of built that into their profiles going forward. So I think there's got to be a turn in the market and won't be far off. And as soon as people see the interest rates starting to peak and everyone's inflation numbers starting to come back a little bit, the market will turn.
Oh, I think
the market always turns before those numbers as well.
Yeah. I think the peak of interest rates pretty close.
Yeah.
Pretty close. I can see it. You can just feel it and see it as you go, So, news flow. What's the news flow for you guys?
Yep, so we're busily out there drilling at the moment. So as I mentioned earlier, we've got 10,000 metres. We're going to almost double the amount of drilling that we've done in the past. That's 60% complete as we speak. We're looking to complete that in the next 3 or 4 weeks. Then there'll be probably a round of assays coming out in terms of results for us. So we'll have a couple of announcements coming from that. We're also looking at the mineral resource that we've just announced. Based on what we're seeing in that current drill program, we're encountering the same clays, the same thicknesses of clays. We don't know what grade is yet, so we'll anticipate hopefully having a bigger resource again by the end of the year or early next year based on these drill results. So we'll definitely be seeing that. We've obviously got money that will probably come back from research and development works that we're all doing at the moment, so there'll be some stuff around there. The mineralogy works is nearing completion. CSIRO is doing some more work around trying to map these clay basins and saying this is how many real tonnes of clay there are out there as well. So as we pull all that together, there'll be multiple announcements that will just continue to hopefully get that OD6 story out, and along with metallurgy results. So we've got over 50 samples. There's about 75 samples in with ANSTO at the moment, all brand new samples. We deliberately don't composite our samples into multiple holes. We keep them all very independent, and we'll even split samples in each hole so that we can understand the individual different compositions around and what the recoveries are. So that takes time. We're looking at the different acid consumptions, the different durations. It's a big program. And then with the current drill program we've got, we'll probably select another 100 samples on top of that. So I don't think anyone else in the industry, other than maybe IXR, has done that many samples and as that looking at it, that bigger scope. So for us, that will feed into all of our financial models, the block models, etc., and that'll tell us where the sweet spot is going forward.
Yeah, look, remind everybody, a mining project like this do take more than a few months.
Yeah, we've only been listed for a year. That's sort of, it makes me laugh sometimes. People go, oh, you should know all this now. And you go, well, in 12 months, we've done a pretty good gig. And we've got a pretty big resource out there. We've got a good metallurgy, initial understanding on it. Geez, what else can you ask for in a company? And we've done everything we said we would from the IPO point of view.
I mean, it's a learning process as you go along as well, and hiccups and, people think of an exploration story as measured in months. I keep saying that, but it's measured in years to decades, right?
Yeah.
And
most projects, there's probably, I think the numbers are less than 5% of projects that people that list on the ASX ever get a project all the way through to an operation. So you've got to look for those good ones. Obviously, grade always wins in a lot of scenarios, but grade and smart people that can get the metallurgy and obviously pull the finance together. Environmental approvals, heritage approvals, all takes time. Environmental approvals will take 2 to 3 years nowadays to get through that whole process. So if you can get a project in an operation in 5 to 7 years, you've done really, really well. There's rare earth ones that have been around for 10 to 15 years and they still haven't got into operation.
But you guys aren't going to take 10, 15 years.
No, that's right. Well, no, we should be on the front end of that.
Yeah.
And we obviously work through the process. The time is now to be building rare earth shows. They need another 10 to 12 mines in the world to actually meet the forecast demand.
Look, as corny as it sounds, alluvial rare earths is probably should get up and running much faster, and all alluvial projects are like that. And I think at the end of the day, it's the chemistry that everyone has to figure out.
Yep.
So to end this conversation, what's the takeaway you want the guys to have from your release, your Maiden Resource?
Yep.
What's that takeaway message you would like them to go away with?
So the grade is high, so that's going to be where the economics are driving. So you've got to have that 1300, 1500 ppm going forward. When you're looking at these ore bodies, we've got that. We've got the scale as well. If you look at IXR, they were saying 5 million tonnes per annum. So you can't get away with 20 or 30 million tonnes of a resource. It's never going to work. You need to have 300, 400, 500 million resource just to start with, which will then get condensed down into the sweet spot reserves, which needs to be 100. So we've got the scale, the metallurgy looks good. We're trying to educate people around how that whole process sheet will work. We don't have all the answers yet, but we can say this is what the flow sheet generally looks like. You need to acid leach it, you need to neutralise it, you need to precipitate out the rare earths. So that basic understanding's there. Now it purely comes down to cost. If you've got 50 to 100% higher grade like we have than most of the peers, if you can keep your recoveries up above that 50%, and you're not dealing with 30 or 40% recoveries, you're going to have more revenue. You're going to be able to afford and to do what you need to do, and you're not going to be marginal. Whether you're the lowest quartile cost producer, who knows? The market's pretty strange in terms of showing what the actual costs are to produce these rare earths, because most of it's done in China and a lot of it's subsidised by state-owned entities. So this is westernisation of a new value chain outside of China. So I think those sort of comparisons are probably not relevant anymore.
Yeah, I think the factor that they're all subsidised, but I think in some ways the balancing act will come, as you can see with the US government trying to, and the Aussie government even acting on certain things, right? Small it may be, but at least you can see it coming through.
Yeah. The American government with that IRA especially, so for a Tesla, for example, there's a $7,500 incentive that goes to Tesla if most of their critical components are from a non-foreign body of concern, so non-China type stuff. So there's a big push from America to westernise the supply chains, and that's where we all come in. So, and I think downstream processing is incentivised to occur into America, but Australia will still need to produce a rare earth carbonate or a rare earth oxide, and that's where the economics will sit to send it to America to get to a magnet or a wind turbine or into a Tesla.
Just so everyone remembers, right? The lithium story, the processing part is still a learning step, because they're going through the same kind of scenarios as well. It's just that it's a bit more advanced and they had more time to look at it.
Yeah, and lithium had some problems to start with as well. So 5 or 6 years ago, they had a big rush of new companies coming in. A couple of them survived, and now guess how big they are, multi-billion-dollar companies. So look, there's no reason why someone like OD6 can't be that next person running through there. Second one for the day. Sorry, Noel.
No, that's good. Look, thank you. It's fantastic. Always good to get the inside out for rare earths from you. I think the OD6 story is something that's out there, and a lot of people don't still understand how it works, I think.
Right. Look, I sort of look at it from another point of view as well. If we've got the grade and we've got the recoveries and we can't get an economic process, then a lot of other people have got no hope. So we're one of the leaders in the forefront, and we're trying to show and educate people this is where you need to be to make these things economic going forward.
I can say from comments from people, you are definitely the guy that people seem to be watch that thing by Brett, and he'll explain everything. So anyway, as you know now, you're going to walk away with the prized possession of coffee beans.
Yep, very nice ones as well.
Kick.
Yep.
And thank you, and till next time.
Thank you very much.